What's up everybody, Nate here, and the cryptocurrency market has been in a really bad place since the start of 2022, which is crazy because at the end of 2021 in November, Bitcoin set a new record high and was actually trading at around $65,000 a coin. But at the start of February 2022, Bitcoin had dropped down to below $40,000 in value. In fact, it hit a low of around $34,000 in January 2022. So Bitcoin and other cryptocurrencies have been on a roller coaster ride. And unfortunately, that ride might not be ending anytime soon. While Bitcoin has exploded over the last 2 years, it has been facing a lot of problems. And now some cryptocurrency experts believe they know what the biggest threat to cryptocurrency will be in 2022 and beyond. And that biggest threat is scams and the United States government. Both of those two things have had a massive impact on Bitcoin and other cryptocurrencies over the last 2 years. And some experts believe that those two things are keeping the crypto market out of record-breaking territory. So today I want to go over cryptocurrency scams and how those are affecting the market right now. And I also want to talk about the United States government and the Federal Reserve, how they have played a massive role in crashing cryptos at the start of 2022. But before I get into all of that, if you haven't already, hit smash or destroy that thumbs up button below and ring that notification bell down below too. Both of those things are completely free and they help to show me that you really enjoyed this content and you want to see even more videos just like it. Thank you so much for doing that. Now let's talk all about cryptocurrency scams. Now in 2021, $14 billion were stolen from cryptocurrency investors in the form of a scam. That is by far a record. And unfortunately, that might continue in 2022 just because of the nature of the cryptocurrency market right now. You see, over the last 2 years, cryptocurrency has exploded. Bitcoin in particular went from around $7,000 per coin all the way up to $65K in November 2021. Crypto is a new asset. I mean, Bitcoin has only been around since 2009. So there are a ton of brand new investors who are putting their money in the cryptocurrency space right now. Those new investors are starting to learn how to navigate the cryptocurrency market. And unfortunately, a lot of them are falling to scams. Now, scams basically mean that cryptocurrency investors are losing their crypto investments or other money related to crypto to people who want to take it. So this could be a variety of different things. For instance, one of the ways that cryptocurrency investors trade their crypto is by peer-to-peer lending. This basically means that you're giving somebody your cryptocurrency in exchange for cash. And it's one of the best ways that cryptocurrency investors have been able to make money over the last 2 years. You see, when you talk about peer-to-peer lending, you can do this over a variety of different networks. And when you lend to someone else, you are technically the lender. You're not actually a big brokerage like Coinbase or BlockFi. So in this situation, you have, let's say, $100 worth of Bitcoin. And if somebody wants to buy that Bitcoin from you, well, you can sell it to them at whatever price you want. So this has led a lot of investors to take that $100 of Bitcoin and somebody wants to purchase it from them for $110, even though it's only valued at $100. And that has been super lucrative for cryptocurrency investors. They've been able to sell their Bitcoin or other cryptos for way more than they're sometimes valued at. However, it can also mean that cryptocurrency investors, especially the new ones, are coming into a lot of scams. So people will attempt to buy this cryptocurrency that is overvalued, but when the transaction fully goes through, the person who is attempting to buy the crypto actually cancels the money on their side. They get the crypto and you don't get any of the cash. This is becoming increasingly more common in the cryptocurrency space, and that is just one common thing that happens. Something else that goes down is phishing emails or phishing passwords. This is when a scammer will try to get your credentials for your crypto account or crypto wallet and then steal all of your crypto or send it to another wallet. That has been growing too. And you might be wondering, well, how can the United States government and governments around the world allow all of these scams to take place? How can they allow people to trade their assets from person to person? Don't you have to do that on a brokerage? Well, if we're talking traditional investments like stocks and real estate, then yes, the The United States government regulates those assets very heavily. We have the SEC for the stock market that makes sure that all trading is free and legal and that there's no insider trading going on. However, cryptocurrencies are not traditional assets, so they are not regulated like the United States government regulates other assets like stocks. That means when it comes to investing, Bitcoin and cryptocurrencies are kind of like the Wild West. And those are just the super clear and obvious scams that are happening in the cryptocurrency market right now. But there's also the idea of pump and dump schemes with brand new cryptos. You see, that is one of the benefits and one of the curses to cryptocurrency right now. Cryptocurrency is decentralized, so anybody in the world can invest in crypto because it's not controlled by a central governing body. Like for instance, the dollars that we use are controlled by the United States government. They get to decide how much is printed and when and who gets it. Bitcoin isn't like that because there can only be 21 million Bitcoins that are ever created. And once they're created, it's up to traders all throughout the world to take a hold of those coins. And that is a big benefit, and it's led to the rise of something called DeFi, or decentralized finance. Decentralized finance basically is the same thing. It's a network of financial institutions and websites that do not operate by the same standards as traditional currencies or governments. DeFi is growing bigger every single day, and it's led thousands of other people throughout the world to create their own cryptocurrencies. Crypto runs on the blockchain, or a particular type of blockchain like Bitcoin or Ethereum. All of that information to create your own cryptocurrency is completely open source, meaning all of the technology and coding behind it is free to the public to look at. Anybody can create their cryptocurrency, which means there's going to be some cryptocurrencies that are kind of garbage. And that is what we've started to see over the last 2 years. You have thousands of cryptocurrencies out there that don't really mean anything. They're basically meme coins, but worse. And the people who create these coins are pumping them up and pushing them up on these decentralized finance platforms and getting a ton of support, and then having people invest thousands of dollars into that coin, and then the creators of that coin end up running off with all of the profits, leaving all of the investors with nothing. We actually saw this with the Squid coin, the coin that was actually based off the Netflix show Squid Game. Well, somebody thought it would be a great idea to actually create a game that you can play online based on the show, but the only way to play that game was to buy a Squid token. The Squid token actually went up in value because the game was super popular, and one token was eventually worth over $5,000. Eventually though, more and more people kept pouring more and more money into this coin, and the creators of the coin ended up running off with millions of dollars in profit. And like I said, this is becoming even more common because anybody in the world can create a cryptocurrency. And right now there are over 14,000 cryptocurrencies in the world. Now obviously for expert cryptocurrency investors, they know what to invest in. They can tell a good coin from a bad coin. Good coins for a lot of cryptocurrency investors have utility. This means that they actually do something. They actually have a certain amount of value in the real world. Maybe they protect you against inflation, or they're able to be used and spent all throughout the world. Or like for Ethereum, they can create smart contracts or NFTs. But meme coins and some of these other coins don't really do anything. I mean, their only purpose is to make fun of cryptocurrency in the first place. But the problem is, while expert investors might see that right away, new investors see an opportunity to make a ton of cash, and that is a big problem. It can be quite daunting for new cryptocurrency investors to see the price of Bitcoin today and go, wow, I could never afford to invest that much all at once. But you gotta remember, Bitcoin didn't start off valued at tens of thousands of dollars. It's gone up in value because of our climate in the world today and a lot of the monetary policies from governments around the planet. It started at zero, and with a lot of these new cryptos popping up all throughout the world, they're at zero too. That is how the developers are playing off the value of these coins. you can basically invest $1,000 or $2,000 and you could see returns of 1,000% plus. That means your $1,000 investment could eventually turn into a $1 million investment. So these beginner cryptocurrency investors want to take their money and amplify it into these brand new coins that nobody has ever heard of, hoping that they can get a massive return from it. They see it as the ultimate investing opportunity. And the developers basically say, well, remember when Amazon was just starting out, its stock was valued at only around $1 in 1997. Today, one share of Amazon is worth over $3,000. So it's gone up 174,000%. And cryptocurrency investors want a piece of that pie. And they can do that by investing little amounts right now instead of massive amounts like it takes to buy Bitcoin or Ethereum. Now, the other thing we need to talk about here is the United States government, because I mentioned before, the United States government isn't really regulating cryptocurrencies, at least not yet. The United States government is looking into brand new ways to tax and regulate cryptos. The reason that the United States government is looking into regulating cryptos now is because of all the scams and hacks that have happened over the last 2 years. Their goal is to try to protect investors. However, in doing so, they may end up breaking the cryptocurrency market. Crypto up to this point has been pretty much unregulated. I mean, all of your big brokerages are able to regulate things as much as possible, but there are some serious issues. For instance, because cryptocurrency is decentralized, if you buy it on an exchange, you can actually take your cryptocurrency off of the exchange and hold it in an offline wallet. So you're not actually selling your cryptocurrency. All you're doing is taking it from that exchange and moving it to your own wallet. The problem is, once you move it to your own wallet, nobody in the United States or on that exchange knows what you did with that crypto. So you can then take it to another network or just sell it in real life for whatever price you want. Also, if it's stolen, there's no record that you really had it. And while that has been a benefit for cryptocurrency investors because they can essentially escape taxes and find tax loopholes, Uncle Sam is starting to figure things out. Congress wants these brokerages to be able to track cryptocurrencies more so that they can tax investors effectively when they go to sell their investment. But if we start limiting the freedom that cryptocurrency investors have with their crypto, well, that kind of defeats the purpose of having a cryptocurrency. Not only that, but the more regulations that the United States government imposes on cryptocurrency will eventually cause cryptos to start losing their shine. I mean, if the United States government starts taxing cryptos more and they make it harder for people to trade cryptos, well, then a lot of investors aren't going to bother with it. A lot of beginners who are only in it for the cash and not really the technology are not going to be interested in crypto anymore. And that's a big problem too, because we already know that cryptocurrency investors, especially the beginner ones, are more prone to panic selling their investment when things go south. This is how crashes happen. You get the beginner investors in an asset, and then when things are great, they invest more, but when things go down, they get scared and sell. So the United States government might start pushing Bitcoins down even further. And while they can't exactly completely ban cryptocurrencies like China did in 2021, they can make them extremely difficult to use and to invest in. Now, I will say that wouldn't be in their best interest to actually do that because of the tax implications from cryptocurrencies. The easier it is to use crypto and the easier it is to invest in, the more tax money the United States government can get. But the United States government has another trick up its sleeve that may end up killing the Bitcoin and cryptocurrency market in 2022 and beyond. The Federal Reserve is currently working on its own cryptocurrency. Now, we don't really know much about this crypto yet and when or even if it's ever going to be released to the public. All we know is that the Federal Reserve has announced that they are very interested in the idea of having their own crypto. And what that could mean is this cryptocurrency could be directly connected to the US dollar. And it could be better technologically than Bitcoin. So one of the biggest complaints about Bitcoin right now is its technology. The Bitcoin blockchain and the tech behind it is outdated. It's the first cryptocurrency and it launched in 2009. Ethereum and some of the newer cryptos have better technology. they're easier to transfer, and they're easier to spend. Bitcoin was the first, but for a lot of investors, it's not the best. The United States government could basically look at all of the problems with crypto today and then make their own cryptocurrency that is far superior. And that could eventually crash the cryptocurrency market because it wouldn't be an asset that you can necessarily invest in. It would be something that the world can use that reflects the dollar, and it makes the dollar stronger. And it's the long game for the United States government because cryptocurrencies might be the future. So the United States dollar, while it could get stronger in the short term, will eventually start disappearing, and their new cryptocurrency could take its place. That's not super crazy because the majority of Americans and people in the world right now don't spend physical cash. They spend cash on their debit or credit card. So money right now is basically functioning as a cryptocurrency minus the value and the technology behind it. We're already using digital dollars. So having a United States digital dollar that's sponsored by the Federal Reserve could be huge. And in 2022, it could be the kiss of death for the cryptocurrency market. But now I want to hear from you on this issue. What do you think is the biggest threat to the cryptocurrency market right now and is holding it back from being the only currency we use today? Do you think that scams in the United States government pose the biggest threats to crypto today, or do you think it's something else? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.